What's going on? Blake here, Trade Tracer. None of this is financial advice. Trade and invest at your own risk. All that good stuff. We're going to get you prepared for this week. As always, we're going to kick it off with the S&P. So it was a wild, wild week. We went from being in an uptrend to no trend and to a massive downtrend. So we had talked about this being the third uptrend of this year. And we had talked, hey, this is an uptrend that's likely to be contained. We were below a declining 50, a rolling over 200 day moving average. And I said, manage expectations on this uptrend. And that's exactly what we got, right? We had 3 days where you could have really gotten paid very nicely. And, all things considered, it really wasn't that bad, right? I mean, let's get rid of this MACD. You had rules to get in long here, rules to trade long. You had uptrend on a break above that. So technically, here's your entry, 399.45. Could have gotten paid, scaled at the end of the day. The next day, gap up, scale again. If this entices you to press long, this is where a lot of people get burned because this is technically price strength confirmation. And if you watched last week's video, I had mentioned that, hey, if we start, showing price strength confirmation, those will be areas where I'm scaling out of the position and not into adding more of my position, just because we're in a bear market, right? Now is not the time to be extremely aggressive. Now is a time that you have to understand we're in a bear market and we have to navigate this successfully. So if you're in from back here, great entry, great job. If you're scaling at the end of the day here and here, excellent job. Now move your stop to your entry. So worst case scenario, if you followed the system, you got stopped at some runners on your entry, right? You were able to scale some profits, lock some profits in, stop your runners on your entry. So now moving into this week, we are in a massive downtrend. And we've been in a prolonged bear market, right? Really since the start of this year. We've had 3 uptrends. This one was the second uptrend this year, was back in March, which paid really nicely. I don't expect to see an uptrend like this anytime soon, unfortunately. So yeah, what are we going to do this week? How are we going to play it this week, right? So anything really in this area from this 415, which I do want to highlight before we get too far into this. I had mentioned whenever we do these, right, we have an entry level and we had targets above. When those are typically levels where I'm scaling or depending on the market environment, I'm adding or pressing on my position. And one of the levels that we had, and I left it in here, was this 415.30. And this was a Fibonacci retracement level, and it also happened to be an important price inflection point. So you can see lows, 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 right? This was an area of interest that I identified. And you can see we've touched this area. As soon as we came into it, we closed on this. Next day, tried to close above, backed off next day, opened, right on it, went above. And following day, finally got a close above, sucked more longs in. And then we kept flirting with this level. And the more that we were touching and tagging this level with no follow through in this downtrend was an indication to me that not only were we losing momentum, the odds were really starting to be more favorable for people that wanted to start shorting in this area. And then of course we had the CPI data, and it just all fell apart on Friday when we got the gap down, right? Thursday had an early signal. I had even called it out in the Telegram. Hey, we're breaking trend, moving back to cash. And that was below this candle's low. So below 407, 50 essentially is when we went to cash. I didn't want to wait to get stopped out on my runners because I felt like, hey, this is a contained uptrend. I'll get back in if we get back above this 415 level, right? Keep it simple. But what do we do from here? What do we do at this level where we're at in our current trend? It's very difficult to trade this. We're in a downtrend, and so you want to be on the same side of a trade as trend. So if you're going to be trading, I would be looking at short setups, but it's really difficult to get swing short in this type of environment when we have huge gaps, right? We have a gap from 401.25 all the way down to 395. That's a huge gap on SPY. So can we see, rips, of 2-3% even in a downtrend? Absolutely. And those are going to be very difficult to handle if you're not prepared to sit through that type of volatility. So it's really difficult to go swing short where we're currently at. But that's, where we're going to be looking is as short setups, right? So this week we will have some short setups. We're going to be focused on the indexes as we always are. And, one of the indexes that is showing the most weakness is the small caps. So small caps is going to be of major interest to me this week. We have breaking of an uptrend, a confirmed downtrend. I think we probably do come and test these levels down here around 168 on IWM. And this does not look good. And we're going to have to be mentally prepared for another 12 to 18 months of lower prices across the board. And the reason that I say that is because we have global macro factors at play here where it's just not good for equities. We have hyperinflation, we have quantitative tightening, we have a Fed that's raising rates, we have a war going on. And all of those things are not good for growth and for equities and for the market to move higher. So, be prepared. We're probably going to be taking a look at reallocating the investment portfolio this week. We wanted to, try to get some, movement. But this market is just extremely weak. It's extremely has almost no strength. We can't sustain any real momentum in any uptrend. Let's take a look at crypto. This does not look good either. We had talked about this area between 31,000, to 29,000 on Bitcoin. We're breaking below that. Unfortunately, I think this, we probably don't see any really support until 24,000 and then maybe down to 19 to 20,000. So maybe another 30% on the downside for Bitcoin. Not great, right? Ethereum, not great either. Okay, similar level. We gave that up. We talked about how important 1700 and 1800 area was. And we lost that. So from here, it's very similar to equities, right? It's difficult to short because you're so late in the trend. If you're holding this, you certainly don't want to be selling down here. If you're an investor and you're holding this long term, you really don't want to do that because, in my opinion, and this is not financial advice, but I do think, if we're looking 3 years out, this is much higher than where we are today. So, to sell your ETH at a low price is not really what I'd be advising if I was an advisor still. It's the best advice I can give is just DCA. If you're confident and you have conviction in crypto and Ethereum and blockchain, I think these could be fine areas to accumulate if your time horizon is over 3 years. That doesn't mean that I don't think we could get to triple digits. I absolutely think it's very possible we could get to triple digit ETH, and I think we could absolutely very easily get to $20,000 Bitcoin. So keep that in the back of your head when or if you are DCA into some of these cryptos. Real quick, I want to talk about gold because it did catch my eye on Friday. So gold, massive bullish engulfing candle, right? This looks really bullish and a lot of movement on Friday when we got the CPI data. So on Monday, I'm looking to see if we can see some continued strength, and more likely than not, we will be taking some equity exposure and moving it into some gold. So keep that in mind, and stay open-minded to anything this market can do. Just to wrap up, this week we're going to be doing as we always do in downtrend, and that's preserving capital. So that's going to be my number one priority. If I do take any short positions, they will be most likely intraday short positions, either with the ES or the NQ, whatever is showing relative weakness on that day. And I'll be looking to use 5-minute RT short. If you see that alert in Telegram, there may be a possibility I'm in that trade. But like I said, our priority is preserving capital. If you waited through all of this to catch this uptrend, that was phenomenal. Phenomenal job. And this uptrend actually was pretty easy, even though we were in a downtrend. We didn't take any heat on this trade. And what I mean by that, the trade was never red. From when you entered to when you closed it, you were never red on the trade. So if you got in here, you're green. If you got in this day, you're green the next day, right? So you took no heat. It was an easy trade. If you scaled and put your stop at your entry, you came out unscathed and you made some good money, right? So that's what I'm going to be doing. I'm going to be preserving my capital and waiting for another uptrend, because we know that when we get these uptrends, regardless of if it's a contained uptrend or a momentum reversal uptrend, the odds are in our favor and we're going to get paid. All right. So that's what I'm doing this week. I'm being patient. I'm preserving my capital. I want to see how this plays out a little bit this week. This week is OPEX, so be cognizant of that. Oftentimes we do see pivotal lows the week before OPEX. Now, am I calling this Friday's low pivotal? Absolutely not. We are in a bear market. If we were in a bull market, I would be looking to get potentially, long this week on a 5-minute RT trade. But yeah, in a downtrend like this, with the backdrop of the macro environment, with sustained weakness, I have very little confidence that this is the pivotal low that we can trade against. So, long story short, be cautious, preserve capital, be patient, and don't feel like you need to be participating in every trade. This is not an easy market to be trading. It requires a lot of patience and even more discipline. So I hope you guys were able to navigate this with me this week and last week. We'll be ready when the next uptrend starts, and yeah, we'll play it safe until this market wants to turn around. So I'll see you guys on the open. Take care.